Okay, everybody, good morning. Happy Thursday. Only 40 minutes late from my target 11 a.m. start. Hope everybody's doing very well. Still got a cold, sore throat, runny nose, working through it, so apologies as my voice is more raspy than normal. As the title of this stream says, we're going to keep on keeping on with the old stock to flow. And the only way to attack it is just to keep providing examples of stock to flows of various assets. And in this case, I'm sticking with gold and silver. We'll get to Bitcoin, probably still not on this show in its entirety, but you know, it's going to take a few streams to get to it. Like I said, a few episodes, but hopefully in the end it will be worth it, and I'll get a nice cross asset chart where you can see a lot of different stock to flows, and we can start to understand if this valuation metric, this model metric, makes any sense or not. Okay, so going back to the charts here, looking at silver again. All right, we got silver and we got gold. Talked about this yesterday. Here's the old exponential trend line. All right, growing at this slope, 52% R squared, not great. What's that R squared represent as far as lifetime compound annual growth rate? 3.5%. Okay, and that's a doubling time of 20 years. Okay, so normally these are your basic metrics. All right, it just makes sense to look at it this way. If you want to look at sort of a run rate of compound growth, actually move back from today is more interesting. So today the price is roughly, and this is ending December 2024, the price is $29. All right, so if you bought anywhere here, 18 bucks, 15 bucks, look at that green moving dotted line. You're running at, 10% compounded, 11% compounded. Dropped down here a little bit with the spike, but then 9% compounded if you bought in December 2022. You're looking pretty good in recent years. But if you bought here at the spike back in 2011, negative 3.7% compounded, okay, based on what the price will go to until today. Okay, you can go back in time. But smooth it all out, forget all that, smooth it all out. You got this lifetime CAGR number, the black line, the black horizontal line. 3.5%, simply log of base 2 divided by the percentage, doubling time of 20 years. All right, it will take 20 years for this trend line to double. Then if you want to get a stock to flow figure, you can do that even with price. Doesn't make any sense to think about stock and flow with price, right? But all that stock and flow is 1 divided by the growth rate. All right, and since growth rates are constant with exponential, it's the same thing. 1 divided by, you got a stock to flow on the price of 29. As we talked about yesterday, you compare that to, say, silver ounces mined. It's not comparable. The numbers aren't the same. Okay, so again, not to run through everything we talked about yesterday, but you got very strong R squared, 100%. All right, it's like 99 and change percent. We got 61 billion ounces mined roughly by the end of last year. Okay. That grows at a compound annual growth rate 1.4% per year. Okay, this black line. Horizontal line. Horizontal black line reflects the growth rate of the slanted straight line on log scale trend line. Okay, 1.4% per year. Base 2, doubling time, doubles every 51 years. Okay, so remember, that's even better than gold, but it's, the price grows faster with silver. Okay, so that's something to think about. But then you put a stock to flow on this, just 1 divided by the growth rate, you get a stock to flow of 74. Okay, so 74 for silver. Now let's go over to gold, all-time ounces, to remind us here what is, oops, where is it? I know I have it. Did I name that wrong? No, I don't think so. AU all time ounces mined. I might have picked up silver here. Sorry. All right. Here's the gold number. All time. Grows at 1.7% compounded. You smooth it out. All right. Forget about the lumpiness of the green. Just smooth it out to the black. 1.7% per year. You can put a stock to flow on that. Just take 1 divided by. You get a number of 59. So strange how gold's stock to flow is lower than silver's. Remember, when you're talking about ounces coming out of the ground, higher is better, as they say with scarcity. So silver actually runs at a higher rate. Sorry to say it for all the gold bugs. I'm not saying that gold is going to go to, $1,000 an ounce tomorrow. Not at all. But that's just the nature of silver. Silver runs at a higher stock to flow than gold. All right. Now, the other, where I left the video yesterday, okay, we talked about this stuff. We talked about how we got price and we got all-time ounces mined, okay? Price, let's go back to silver now, okay? The exponential trend, all right, you see here is 52% R squared. It's not great. It's not great compared to all-time ounces mined, R squared of 100%. So, again, which is correct, which is the best way to measure the growth of value of silver? I don't know. I mean, one thing's describing ounces coming out of the ground. One thing's describing price. Price is always the purest signal in the market. But of course, we can do this another way. Let's take price times ounces coming out of the ground all time. What will we get? Well, we'll get a silver market cap. Silver market cap. Let's take everything off just to look at it. Okay. You know that we're looking at dollars or market cap when it's the line. You're looking at ounces when it's the area, just in this little differential here. Okay. So all-time market cap is the same thing. It's just ounces coming out of the ground times price. All right. So we see that we got to over $1 trillion silver market in 1980. We did get to a $2 trillion market very briefly in 2011. And now we're still under a $2 trillion market, 1.7 trillion. Bitcoin passed the all-time ounces of silver mined throughout humanity in dollar terms this year. Okay. We can run a trend line on that. What do we got in R squared here? 68%. Makes sense, right? Here our R squared is 100% R squared. If we do price, R squared is 52%. So it makes sense that the R squared for the market cap, which is simply a product of the two, is in between. Okay, so this is another way to measure value. All right. What is the slope of that trend? Well, again, it's more volatile, more wobbly than if you look at the slope of this trend, which is pretty much solid at, let me take off this 1.4, 1.5% per year, compound it, capitalize it 1.4% per year. We go with the all-time trend of the market cap, 4.9% per year compounded. Let's take away the noise. Just this straight black line. This represents the slope on an annual basis of this straight line on log scale, curved trend line. 4.9% per year. Okay, again, let's look at just simple compound growth rates are the best thing. All right, for finance, for the financial world, and most things grow in nature. It's just very simple. 1.4% for ounces coming out of the ground. 3.5% for the price itself. What does the product give us? 4.9. It's a sum. All right. 1.4, 3.5. What's the sum of those? 4.9%. Makes sense, huh? So market cap is another way to measure the growth of something and to measure the value of it, is market cap. But I would hasten to say that if we rely on this metric, market cap, above and beyond price, maybe that's misleading. Maybe. Firstly, because, although I do work really hard to get pretty good numbers for you, and I've gone through a lot of different sites, Silver Institute, Nick Laird from Australia has provided me with some data that I've purchased, actually. I've done my own research. CPM Group, there are other places as well to try to cross-reference it. No one knows, of course, the all-time ounces of silver that have come out of the ground exactly. Roughly, we can say, 30 billion, 55 years ago, now 60 billion. Okay, so it's doubled in 55 years. By the way, what's the doubling rate? 51 years, to be precise. The trend line doubles every 51 years, okay? But no one knows for sure, right? But it certainly helps. It helps for the mind to intuit what we're talking about here, about the growth of something. Well, yeah, put it in market cap. It's helpful, but it is a derivation. It's a derivation of the highest signal in the market, which is price. No matter what anybody tells you, price is the best signal. Okay, so even though the product of these two will be an additional, you can add it to get this lifetime compound growth of 4.9%. I'm not saying that this is the end-all be-all of how the silver market looks, okay? And indeed, there are some asterisks. There are some things we need to talk about further. Of course, silver has a larger industrial base in its market than gold. Silver is roughly 50%, gold's roughly 15%, okay? Still, nonetheless, it's something. It's interesting, okay? Let's look now for gold. All right, let's go back. We have our ounces mined, 1.7% per year compounded. Let's take away that stock to flow, which again is kind of an ape figure, a meaningless figure, really. 1.7%, that's the strong number, right? That's the thing that you compare to like population growth, compare it to the inflation rate, other things. This is in ounces mined, native unit. Stock to flow would be 1 divided by this number, 59. But really, all you need is the 1.7% to know. That's the slope of the trend line. Okay, now what was the price? What was the price? Price was 5.1% per year. That's the slope of this trend line. Okay, very smooth, 5.1%. It can be noisy. For sure, it's more noisy here in recent years because price has been screaming. But if we look at how this green line dances around the all-time line, you got to just run the calculation. All right, the strong slope of the curve number is 5.1% per year. Okay, that's a 78% R squared. So let's take the product of these two now. Price times ounces. We get an all-time market cap. Okay, all-time market cap. What is it, by the way? Let's take off the trend even. $18.2 trillion. $18.2 trillion. That's the all-time value of gold. Might seem big to you, might seem small. When you hear things like global money supply could be, broad money could be 100 trillion. You hear the monetary base that I talk about, it's 27 trillion and probably falling by next quarter a little bit more. World GDP over 100 trillion. These huge numbers, 18 trillion might seem small. Nonetheless, that's what it is. It's hard money. That's the market cap. Okay. Trend line, 86%. Let's go back to the trend line here. Remember, 100%, so just a great trend line. Ounces upon ounces coming out of the ground, 1.7% per year, stamped, very solid. All right, but the price, not as strong of a trend line, 78% R squared. What's the R squared of the market cap? In between, 86% R squared. So this derivation now is also something we can measure. We can measure the growth rate of the market cap. What is it? Smooth it out, 6.9% per year. All right, and like silver, that's going to be the product of 1.7 plus 5.1. summing it. Summing. The value is the product, all right, 18 trillion, but the growth rate is the sum of those two growth rates, okay? So there's something to think about. The gold market, we can say, grows at 6.9% per year. But again, I just hasten to say, does that mean this is the best growth rate that we should always think about with gold? 6.9%? I don't know. Price is only 5.1%. It's a direct signal. Market cap is a derivation. It's interesting. It's hard to track. It took me a lot of years to get this beautiful chart here for you. I hope you guys find it beautiful. It took me a lot of years to get to this. But, it's just one more way to do it, okay? So you can see we're under trend. Look at that. When Nixon went off the gold standard, the market cap, all the gold that's ever been mined throughout humanity was only worth $100 billion. $100 billion. All right. Screamed up to $2 trillion when gold hit $800 an ounce for a couple seconds in 1980. And fell back to like $1 trillion. Then rose again, $9 trillion in that peak in 2011 when it hit over $2,000 per ounce. Now $18 trillion. Okay, so as the ounces keep coming out of the ground, we keep having a market price on the margin. Both are exponential. Straight up. Exponential curves. The product of those exponential curves will get you the market cap. And the sum of those growth rates will get you the lifetime CAGR of the market cap, 6.9%. Now, in my opinion, the best signal is doubling time for everything. Okay, it's the easiest thing to understand. So what's doubling time of 6.9%? 10 years. 10 years. That's an interesting number, isn't it? Okay, let's go back to price. Even though doubling time for price is 14 years, not so fast, market cap doubling time of gold is 10. Interesting. There's a lot going on there. There's industrial gold demand. There's people buying more private bullion, people buying ETFs. Generally, it goes up, Not always. We're not sure if it will always go up, especially if Bitcoin starts to bite away at this market share. But generally, it goes up. It unquestionably goes up in an exponential fashion. And then, of course, we have central bank purchases of gold as well. So I've now shown you 3 different. Well, before I say that, let's do a stock to flow now on gold. Okay. Remember, what's stock to flow? It's very simply, forget doubling, which is a more accurate number. It's log of base 2 divided by the compound growth rate itself. You'll get this 10 years. All right. You put it into a financial calculator. You just take kind of the dumb economic professor measurement. You take 1 divided by this number. You'll get stock to flow of the gold market cap in dollar terms. What is that? 15. Okay. So again, different way to look at it. All right. We have a 15 market cap, or excuse me, a 15 stock to flow in dollar terms. But if you look at it in actual ounce terms, it's 59.60. All right, that's the number that's commonly quoted. But you can do different stock to flows. You can try to understand this in different ways. It's not incorrect. You can still do that calculation. All right, so this is, again, this is 4 times. This grows 4 times faster in dollar terms. This tells you something about the dollar. The gold market cap in dollars grows 4 times faster than gold ounces come out of the ground. Good to know. But not the only way. Not the only way to do stock to flow. Okay. Let's take a look at my website here. All right. This is the Top Money site. Remember, if you want to do any comparison, Bitcoin is always compared to base money. All right. Base money. We got all these fiat currencies, dollar, yuan, euro, yen. There's Bitcoin already number 6. Now we got silver and gold. Okay. Silver and gold. But notice here, what do I have here in the chart? Gold available, silver available. What does that mean? Description: all-time ounces mined, less industrial uses. Description: all-time ounces mined, less industrial uses. So if you want to work out, this is always in my opinion, right? You want to get a number in the gold and silver market that is a liquid store of value number. You do not include industrial usage. You did not include industrial usage. Because industrial usage has a different use case. Yes, to acquire it, you're going to have something to do with the market price of silver, but it's very derivative. It's very, who's to say that some conduit cable, that you're buying as part of a grand project in New York, right, that has some silver in it, is going to exactly reflect the spot price per ounce. It's probably won't. It might on average over time. I'm not sure, to be honest. I'm not sure. But it probably won't, on the margin, be valued exactly at the spot price per silver, because there's other things happening there, right? I mean, you got New York property taxes to think about. That's going to inflate the value of that conduit. There's just all sorts of things that flow into industrial usage, which is different than store value usage. Okay, that's why I'm always trying to get to an apples to apples comparison with my work. All right, it's taken a lot of years to get to these numbers. All right, so let's look now at the actual numbers. Okay, what is it? Gold, 5.9 billion ounces. What is it? Silver, 31 billion ounces. Okay, so let's go back to our all-time ounces mined. What do we got? 61 billion ounces. I'm doing this backwards, but whatever. 61 billion ounces for silver. Let's look for gold. What do we got? 6.9 billion ounces. Let's go back to my chart. We got a billion more ounces. That is, as my calculations can, roughly confirm, a billion more ounces in it is industrial usage for gold, and 30 billion ounces is industrial usage for silver. So this is kind of the brass tacks of how you value these things. Okay. Now, why do I bring that up? Let's go back to this. Again, Plan B, when he did his initial stock to flow paper in the spring of 2019, which again is 6 months after. So when I did my Bitcoin power curve analysis, showing that Bitcoin followed a power trend, not an exponential trend, but a power trend. He was using these numbers. I think he's deleted them. I can't find them with a quick image search. Maybe you can. Let me know if you can. But where he was showing BTC with a stock to flow of 25, this is 2019 chart. All right, gold 54. Keep in mind what I just showed you here. It's close. Whoops. I'm calculating. This price. I'm calculating 59. Okay, so it's close. 54. Diamonds. As I said, someone show me a worldwide price of diamonds, and I'll show you why it would make sense to put that in here. But since we don't have that, this should be X'd from the chart immediately. Someone show me a worldwide spot price of diamonds. What's the unit? Is it per carat? Is it per kilo? Are you sure? Let me know if you see any worldwide spot price of diamonds. Okay. He derives 19 here. I don't know how. It's a log scale on the stock to flow value. Silver, he puts at 3. I'm very aware why he put 3. We'll talk about it in a second. Palladium 1, platinum 0.4. Again, there's a lot of industrial usage in platinum, palladium, just as there is in silver. I could find many stock to flows for platinum, palladium, just as I'm about to show you, and I have shown you many stock to flows for silver. All right, so what are we doing here with this chart? This is a cross-asset model, okay? This Money Morning newsletter or whatever was copying his. We got valuation, all right? Valuation is market cap on the y-axis, up to 100 trillion. We got stock to flow on the x-axis, okay? Log scale on the x-axis. So what he's showing is, of course, Bitcoin stock to flow increases over time, right? We had a very small stock of Bitcoins back in 2009. All right, so if you took different snapshots of stock to flow at different market caps, all right, his y-axis, obviously the higher market caps are going to have a higher stock to flow because as we move on through time, Bitcoin has a higher stock to flow. So that's what he's finding here, these little snapshots. And it's hovering right now around 25. This was in 2019 when he was doing this. Okay. I don't disagree with that sentiment. I mean, that's, to me, stating the obvious. Okay. But the question is this a way to value Bitcoin and specifically in relation to other assets? Okay. Why did he put diamonds here? Why did he put silver? Why did he put palladium, platinum? I would like an answer to that question. Okay, because he thinks that there's a relationship here to all assets. All right. But the devil is in the details. All right. My contention here is that if you put a lot of different calculations of a lot of different stock to flows, you're not necessarily, you might get some directional view. Yes, a higher stock to flow will equal a higher price. But can you model based on that? That's where I think it gets spurious. Okay, and I'll try to show you that again next couple days. Let's look at this silver stock to flow of 3. All right. I'm fairly sure that he got this from Saifedean Ammous because Saifedean talked about that a lot. He's a big gold fan. It's fine. No problem with gold. I got no problem with gold. I happen to like Bitcoin more, as I believe Saifedean does. But, all right, we got a number here of 59, close to his 54. Not exactly, but we got a number here of 59. Stock to flow. Why, when I do the all-time ounces mined, do we have a stock to flow of 74? All right. Why? The answer is because silver comes out at a slower rate. It comes out of the ground at a slower rate of gold, as I've talked about. But why would he get 3? How could he make 3? How could he shoehorn 3 into the model, Plan B or Saifedean? And the answer is basically they're discounting the stock. Okay, so let's go back to my chart. Available, all right, which I have always used as silver compared to Bitcoin. Okay, notice that that's about $1 trillion, a little less than $1 trillion in value. Okay, available just discounts industrial, takes out industrial. But what then does it mean in available silver? What is in there? Same as available gold. It means gold in bullion form, coins and bars, and gold in jewelry form. All right, that is the same for gold and same for silver. In silver, it is true. Silver is has another subset, which you could say silverware. In fact, silverware is a large portion of what I'm calling silver jewelry. I'm not breaking it out differently when I'm talking about available or whatnot. It doesn't even matter for this chart. As I'm showing available, it means silver jewelry and silver bullion. Okay. But he wants to break it out even more. Saifedean, he wants to discount that even more. Okay, and remember, let's see if we find the all-time, if that's available. That's what I'm about to show you in a second. Here's the all-time silver market cap. What is it? $1.7 trillion, $1.8 trillion at the moment, $1.8 trillion. Okay, it's just all-time ounces out of the ground times the price. Very simple. I got to available at $1 trillion. So what does that do? Well, I'm discounting the industrial. So let me show you. Let me take off industrial. Here it is, finally. Okay. Available market cap. I'm not going to show you the ounces. Just it gets redundant if I show you chart after chart after chart, which is kind of the same format. I get that. But what is this available market cap? Well, I'm getting to a number, which is basically 31 billion ounces of silver instead of 61. Okay, so I'm discounting 30 billion ounces, at least now, and it changes a little bit over time. Of course, you got to look at the numbers, dig into it. That's how I get this available market cap. Okay. And in my opinion, this is, again, liquid silver. This is store of value silver. This is silver in coin and bar form and silver in jewelry form. Okay. So the reason that in the initial models, Plan B was putting a stock to flow of 3 is he was discounting it even more. He was discounting the stock of silver even more. What was he doing? Okay, well, if he wasn't using 31 billion ounces, what was he using? Okay, so here's gold. There's gold. This is another way of looking at the same stuff in ounces. This is on my website. You can see this. If you add up the all-time gold, okay, you get to 6.9 billion ounces, all right? That includes gold in central banks, gold in bullion, and that's like a remainder. It's private bullion, all right? Gold jewelry, huge portion of the gold market is jewelry, and then gold industrial, okay? Now silver, it's quite different. There is a little bit of silver in central banks, but it's like so minuscule, I don't even bother with it. There is some central banks that hold a little bit of silver. Doesn't matter. Very small portion of silver to the total market is in bullion. All right, only about 4 billion ounces out of 60. Okay, 4. But a huge portion of the silver market is in jewelry and in silverware. Okay, so that's in this jewelry section. 26, 27 billion ounces. And then relative to gold, we see a huge portion in industrial, which I just talked about, 50%. Okay, 30 billion ounces versus 1 billion ounces of gold. Okay. But this number, how Plan B got to this silver stock to flow of 3, which I notice, I notice he's not doing it anymore. Probably realized it didn't make any sense. He's discounting not only industrial, all right, which you should do for gold, but he's also discounting jewelry. He's only getting to the silver bullion of 4.2 billion ounces. That's what he's doing. Silver comes out of the ground in production. New silver comes out of the ground in something like 800,000 ounces per year. A little bit more than that. 900,000 ounces per year. It depends on the year. Okay. So if you take for the stock of just silver bullion, 4.2 billion ounces, divided by the flow, 800,000, 900,000, a million ounces. Sorry, 4.2, there's 800, 800 million, sorry, 800 million is a flow. 800 million was a flow. 4.2 billion is a silver stock, 800 million ounces, or just a billion ounces as a flow. What's your stock to flow? 4. That's my stock to flow as I calculate it. Close to his 3. Okay. So he is discounting a huge portion of jewelry from the silver market. But why would he do that? He's not doing it for gold. This 54 for gold is not discounting. It's not, I repeat, it is not discounting gold jewelry. If you discounted gold jewelry from your stock to where you only get a total of something like 2.7 billion ounces, you're going to get a stock to flow that's something like 20 for gold. Okay, so this is my point of the whole presentation. This is the going through this stuff with a fine-tooth comb. This is wrong prima facie. 54 stock to flow for gold, 3 for silver. These are not apples to apples. If you're going to say 3 for silver, fine, but then you better say 20 for gold in the same sentence. 20. Gold's still better, comes out of the ground slower in this case, all right, when you discount the stock, but you got to be consistent. And likewise, you got to be consistent for the whole picture, right? I mean, yes, we can fully discount industrial usage. I am doing that with those stock to flow calculations. But still, it's just a fact of life that silver comes out of the ground slower than gold. I'm not a silver bug. I don't hold silver. I used to hold some, don't hold any at the moment, actually. So, have at it. If you like silver, you want to pump it in your newsletter, I don't care. My point is just being consistent. And you really got to tear through the numbers to do that. So the store of value gold, you definitely include jewelry. It's 50% of the market. It's 3 billion ounces. The other 3 billion are in central banks and private coffers, ETFs, bullion, all the rest. And you gotta include that jewelry. I mean, for silver, it's a huge part of the market. You get to 50% then of all-time ounces, 30 billion ounces for silver. So, having said those things, can we get to, some more comparable numbers? The gold available market cap now, same thing. Look, available. Oops. I'm not discounting jewelry, all right, but I am discounting out industrial. Let's look at gold available. 15 trillion. Okay, so this is the number that I use for my summaries, for my, the number to catch Bitcoin. I didn't catch the right month, right? 15.5, and it's up a little bit more, 15.5. On my site, I have 16.3. This is current. This is absolutely current numbers. This is back at a silver price ending in December, so it's a little bit lower. Let's see what the price I had in December. 26. And it does make a difference, right? So if you get back to the price of gold today, we're at 27.7. We're closer to $2,800. And every little dollar matters when you capitalize this stuff. Okay, it's just a time difference here between my website is totally current, 16.3 trillion. This is as of December, 15.5. Point is, from available to all time, you're taking out, nearly 3 trillion, 18.2, 15.5. So you got to be rigorous. If you want to keep these things apples to apples and look at them all. Go through them all with a fine-toothed comb, measure the slopes, understand that we're dealing with exponential growth, and then maybe we can do a cross-asset model that looks something like this. And maybe we can say that stock to flow is something that's worthwhile as far as evaluating where Bitcoin could grow. That's all I had for this one. I'm going to continue to update this. I got all the charts. It's so much to show you guys. I don't think it, if I just keep showing you available silver, available gold, we can go down to showing jewelry next, bullion, gold in central banks. I do many different videos with all that stuff. The point is, in the next couple of videos, I will get to a cross-asset model of my own with gold, with silver, with Bitcoin, and we can see if we can, if we can draw any conclusions at all that stock to flow might help. So that's all I had for today. Let me know if you guys have any questions. Otherwise, we can leave it here. Like this is, it's constantly updating on my website. All right. 6.9 billion ounces of gold mined throughout humanity. Hack off a billion ounces to get to the available or store value gold. And same thing with, and more so with silver. Hack off 50% or 30 billion ounces to get us to store value silver. These are the numbers that would compare to Bitcoin. These are the numbers we can use to stock for a stock to flow model. All right. Well, thank you guys for watching. Hope you have a great day, and I will talk to you tomorrow.